Well, the stock has certainly replaced Tesla as the name that trades most dollar volume per day.
Less erratic.
Let's begin, though, with Nvidia surging on that blowout quarter. Sales more than tripled, driven by strong demand for AI chips. Guidance exceeds consensus. This is Jensen Huang on the call last night.
This last year, we've seen generative AI really becoming a whole new application space, a whole new way of doing computing, a whole new industry is being formed. And that's driving our growth. We guide one quarter at a time, but fundamentally the conditions are excellent for continued growth, calendar 24 to calendar 25 and beyond.
Biggest single day market cap move, Jim, beating Meta a few weeks ago.
Yeah, it should be up more. I think that what's happened is you realize, as has often been the case with Nvidia from around 2014, that when you see a number, you realize that the stock turned out to be very cheap a year ago. And I think people have to realize, for instance, really some amazing data of when we thought that they were going to earn $20 at the end of the year. In the calendar year, I think that they could now do $24.60. So even in just 6 weeks ago, we thought they were going to earn $4 less than they're going to. And people have to understand, when you're trying to value a stock, what that says is that stock that was very expensive 8 weeks ago, it turns out to be reasonably valued, and that matters.
So you don't have a problem with Key going to 1,100 or Bernstein going to 1,000 today?
No, I think that what Jensen spent a lot of time laying out when he talked about the notion. Remember, we've got two things going on. We have the acceleration computing, and then we have generative AI. What he did was lay out something that people have not been willing to do, which is to say, it's not like the 386, 46 Pentium 2, where the 386 is really obsolete. It's that you can use the H100, the H200, they'll do some new software. There's not going to be a difficult transition. And that was really important because I think a lot of people were worried that there could be a gap, as is the case in a lot of technology. And this is one of the great secular growth stories. Now, remember, he's using trillions. He's basically saying the whole world, everything that we have, which is just general computing, is out of date. So we have to redo everything. If we have to do everything, whether it be auto, you just think, he has said to me over and over again that manufacturing is by far the biggest market in the world. Well, everything that's manufactured will also have to use his chips.
Yeah, I mean, and that's why the basket of redoing old data centers, building new data centers, huge buckets of demand. These shorter lead times, Jim, is that a sign of cooling demand?
No, not at all. It's just that finally they've got Taiwan Semi cooking. These things are very hard to make. They're very big. And one of the things he also talked about is that there are dual uses. So if you're a cloud service provider, you want them for yourself, but you also want them for the cloud. A couple companies that were called out mightily. Meta called out as a monster user of their product. And I thought that was very important because I think people should realize that that's inference. That's why their Instagram ads are so good. Called out Google. Called out ServiceNow twice, saying that they're the ones that have been able to use they've been able to develop generative AI in order to be able to help workflow. The call was magnificent. It was a well-orchestrated call. Colette Kress, one of my favorite CFOs, she was a little bit more effervescent. She told me that she thought that was not true, but I can detect enthusiasm from anyone. And then Jensen comes in on the Q&A. Jensen was more Stravinsky last night than he was Taylor Swift. He's been Da Vinci. He can be Stravinsky. He can be anything. He can be anything he wants because he may be the smartest man in the world.
Well, the stock has certainly replaced Tesla as the name that trades most dollar volume per day.
Less erratic.
And to your point about the tone last night, this is Jensen Huang talking about growth on the call.
Generative AI has kicked off a whole new investment cycle to build the next $1 trillion of infrastructure of AI generation factories. We believe these two trends will drive a doubling of the world's data center infrastructure installed base in the next 5 years and will represent an annual market opportunity in the hundreds of billions.
Right. I mean, he's basically saying you've got a couple $1 trillion infrastructure that has to be redone. There's $40 trillion in manufacturing. Arguably, everything has to be redone. You have to look at it like he says the general computing, which we think of as Intel, has run out. Moore's law has run out. And so what's happened is that there's no more game. He even talked about how they're depreciating this stuff longer because they won't put any more money in it. This is where the money is. It's 20 times faster, and yet it burns cooler, which is very important to Jensen because he's anti-waste. It was a dazzling call, and I think that there will be people, I call them Luddites. These are people who wanted to destroy the loom in 1811. They descended from Sherwood Forest, Nottinghamshire, and felt that perhaps it's wrong that we have such a powerful loom that wipes out seamstresses. Well, this company is going to wipe them out everywhere. And by the way, one of the most powerful moments was when they talked about sovereign AI, that we can't just have it be in English. Every country in the world, save perhaps China, has to have its own Jensen, its own NVIDIA.
Yeah, that's the sovereign element has been one of his big
huge
doctrines last few weeks. Help viewers understand the impact China had on data center in the quarter.
Well, look, I mean, he's been saying over and over, and I was joking about it yesterday, that he's going to say that it's great degradation. It's going to not go away, but it's going to decline substantially. But the issue there is that everybody wants them. There was a tremendous amount of talk about allocation and how Jensen's going to give them away fairly. So believe me, the Chinese are going to, their product will be sold. NVIDIA disputed this with me originally. And when I said, listen, can't you mark that product up that would have gone to China? I said, look, Jim, we don't do that. We don't take advantage of any customer and say, listen, China's not used them, we're going to mark them up 20%. One of the things that they spend, they're very close with all their customers. And one of the reasons they're so close is they don't do that stuff. Jensen's very close with Zuckerberg. I think we've actually seen, I will go so far as to say that you're seeing a Jensen influence in the way Zuckerberg carries himself. Because Jensen is light. He's light. He is not, I'm saying not serious, one of the most serious people in the world.
I think people understand.
But you see, they work very close. They are actual friends. Because I asked him, I said, how often do you speak to Mark? He says, all the time. And initially I said, well, how's that possible? He stands for combat. You stand for peace. And he said, no, that's not, that on the surface. But there's a lot of conviviality, congeniality in the relationship. And that's why I think Meta came out as being the #1 user in terms of import of their business.
Keith Fitz joins us now. I want to talk about Tesla. Would you buy the stock if it dropped below $200?
No question about it, Stuart. I would hopefully be smart enough to buy a whole lot more of the stock if it drops under 200 bucks.
That's a dip you would buy?
Oh, yeah, absolutely. I already hold a fair chunk of it, and I'm looking to add to positions. This stock has got hundreds of billions of dollars worth of charging network. It's got AI. It's got the world's largest autonomous driving database. This stock, I think, is going to double or triple in value in the next few years.
But it faces extraordinary competition now from Chinese imports. It faces legal challenges. And Elon Musk, is always in the news and not always in a good way. Doesn't that pull you back a little bit?
That last point is the one that concerns me, but visionaries are always like that, and you've got to make a bet here as an investor. My belief is that the company is going to set the bar for a long time to come. I may be, completely wrong on this, but I don't think so, because we've seen Microsoft, Apple, we've seen many other companies go through similar challenges at various points in their history.
So you'd buy it under 200, but you wouldn't buy it at 218 right now?
Oh, I'm still going to buy it. I'm probably going to, I hope I'm smart enough to buy it all the way down, because that's how the game is played. You add to positions when they're on sale.
Tesla is about to hit a massive turnaround in its stock price. And the reason for this is going to shock you. Nvidia recently announced its financial results for the fourth quarter, and we think a few twists and turns could potentially put Tesla in the spotlight.
What the margin guidance is ultimately going to be, how many more price cuts. And I think that's the frustration. At a time that investors need adults in the room, it felt more like preschool. And I think that was a conference call. You're going to see pressure on the stock. The long-term story doesn't change. And Tasha, I'm sure you'll agree. But in the near term, the bears win.
I'll put this question to both of you, Dan, just because you brought this up a moment ago and we mentioned this in the intro. Is it as simple as interest rates not being in Tesla's favor, or is there something else at play within the broader EV demand landscape? I'll go to you, Dan, first, and then I'll get your thoughts, Tasha.
Look, demand overall has actually been pretty strong relative to, if you think about how bad it could have been, 35% plus growth, call it 18, 20% this year for 24. The reason the stock's down, it's because of margins. And I think 80% of the reason the stock's down is communication, 20% results.
Tasha, I want to get your thoughts on that as well. And I'll layer on perhaps this additive, a new model. Is that really going to spur demand the way that some investors were hoping for or might have anticipated?
Yeah, well, I think, Dan said it, right? I think that the focus should be on the long term here. And a lot of investors currently right now are focused on the short term. Hey, look, Tesla's not immune to changes in interest rates, right? But when you look at the auto industry as a whole, they are, one of the only electric vehicle manufacturers that has this profitability. And we heard on the call that they're able to reduce costs at really an unprecedented rate. One analyst thinks it's over 10% a year. And they said they see further opportunity for cost reduction. So, they've cemented their lead in electric vehicles. I think if you want to talk about the next year or so, we should be talking about robo-taxis, right? We heard that full self-driving version 12, their latest version of autonomous driving software, is going to roll out to more customers in North America soon. I think that shows confidence in their autonomous capability. And as you know, we think that's a multi-trillion-dollar opportunity. We also heard that Optimus might ship next year. General purpose robots for manufacturing alone, we think could be a $10 trillion market as a whole. So we're really excited for those AI opportunities. This is one of the greatest AI stories of our time.
Nvidia's earnings call is here, and the whispers on the street aren't all sunshine and rainbows. In fact, the analysis are actually generally optimistic. But there are some dark undercurrents of concern bubbling beneath the surface, and it's undeniable that a potential storm of clouds is hanging over Nvidia's green landscape. Imagine the king of graphics cards tripping over its own wires and landing flat on its face during its earnings call. It's pretty disastrous, right? But that's not entirely what the call's all about. Rather, it's about the unforeseen potential that awaits growth companies like Tesla. Nvidia might be making an unusual earnings announcement soon, and this misfortune could be a massive golden opportunity for Tesla. But how possible is this? Will the Nvidia defy the negative forecasts and keep the good times rolling, or are we going to see a correlation and a shift in the tech landscape? Today's video explores interesting possibilities of Tesla to snatch victory away from the jaws of defeat. So what is the big deal here, and why should Tesla investors watch out? Let's find out.
Nvidia is set to report after the bell. Stock features, they're lower this morning, pressured by Nvidia's declines. Now, the chipmaker lower once again in pre-market. This comes after it suffered its worst day since October. Now, Nvidia has been a huge driver of the market's gains. Putting that in perspective, it's actually accounted for about 30% of the S&P 500 gains this year. So what should we expect tonight, and what does that mean for the broader market? Here to break it all down, we've got team coverage. Dan Halley, Josh Schaefer joining us at the desk. So guys, let's talk about just how critical this is going to be for the market. And Dan, whether or not you think Nvidia can and will actually live up to all the hype.
Yeah, the expectations are through the roof for this, right? They blew away expectations in the prior 2 quarters. They had this huge forward-looking guidance that really, I think, had everybody stunned out of the gate. Originally, they had to revise up their guidance, I think, a few quarters back. And so, a lot of this is going to come down to, are they going to beat? That's obviously the big thing. But then what is the guidance going to look like? What does it mean when they see, okay, we're continuing to see people want to get these chips. We're continuing to see people get the most expensive chips, the H100s. And I think that's really going to be the big difference here for them. We're seeing more competition, but no one's really caught up quite yet. AMD is the closest. Intel is still, pretty distant at this point.
It's going to be interesting, Dan, to just see how the stock moves, right? We talk about how much this stock has rallied just in 2024 alone, and it almost feels like there's only so much room to run here, right? And I think that's important to set as an expectation for investors just coming into this, because Nvidia has had very impressive beats going back several quarters now, but think about how the stock reacted last quarter. Yeah. The stock didn't exactly skyrocket, right? Because you're seeing that pricing in happening over the last couple weeks as other tech companies companies mentioned that they want NVIDIA chips, right? That was part of the run-up here that we've seen. So I think overall, when you think broader market, it's not necessarily like you can maybe expect, or you should expect, NVIDIA to be carrying the S&P higher tomorrow, carrying the NASDAQ higher. If anything, maybe the concern is actually something to the downside.
Well, the first kind of look that we have at what the potential move could look like, Options AI has some data on this, and based on where they're seeing contracts kind of net out for post-earnings moves here, we're looking at an absolute value of either 9% higher or lower here. So that's the type of expectation that investors can have going into this, and it'll really be a question of what NVIDIA says that also continues this kind of rising tide type of mentality as well here.
If Nvidia's report throws shade on the whole tech industry, sparking fears of slowdown and whatnot, investors might start getting jittery. In fact, they're going to be looking for safer bets, companies less susceptible to the whims of the market. And guess who will fit that bill perfectly? Tesla, with its ever-growing market share in the electric vehicle space and its futuristic forays into sustainable energy. Hey guys, welcome back to Tesla Tomorrow. Think of it like this. If the tech party's getting raided, people are going to leave the dance floor and head to the chill zone. And Tesla's got the potential to change the minds of even seasoned investors, whether bulls or bears. Investors who are seeking refuge from the tech storm right now might find Tesla's stability and long-term growth prospects to be mighty appealing. But that's not all. Remember how negative news can sometimes lead to stock price dips? Well, if Nvidia's report tanks its share price, there could be a buying opportunity for Tesla. But that's not even the interesting part. Savvy investors might see it as a chance to scoop up some discount Nvidia stocks, knowing that the company's still a tech titan with a bright future. But hey, a buying spree in any major tech stock can have positive rippling effects, potentially lifting the whole tech boat as investors' confidence rebounds, and that includes Tesla. So while Nvidia's stumbles may send shivers down the spines of some tech enthusiasts, for Tesla, it could be an unexpected time to shine. Before we carry on though, if you're liking this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. There are some reasons as to why Nvidia might not record impressive earnings figures. First up, the dreaded macroeconomic headwinds. Inflation's a party crasher, no doubt, and rising interest rates and potential recession fears are making consumers tighten their belts. In the long run though, it could lead to people holding off on upgrading their gaming rigs or workstations, which again spells trouble for Nvidia's bottom line. Second, there's the ever-present supply chain woes. We've all been there, waiting months for a new GPU, and while things have improved compared to the pandemic, supply chain disruptions are lingering still, as these shortages and logistical bottlenecks could limit Nvidia's demand and its ability to meet up with it as well, and it even exists in part due to this issue. And third up is the increasing competition. AMD's getting pretty spicy and Intel Arc is also entering the ring. Now, this increased competition could chip away at Nvidia's market share, especially in the budget-friendly segment, and let's not forget the lofty expectations. Nvidia has been on a tear with its stock price reaching record highs. However, with great expectations comes the potential for disappointment, and if Nvidia misses analyst forecasts, even by smidge, then the stock price could take a nosedive. Now, don't get us wrong, we're not saying Nvidia's doomed, definitely not, but what we are saying is that while Nvidia is a powerhouse with strong fundamentals and innovative tech, it is also important to acknowledge the potential changes and challenges they face. The upcoming earnings call could be a reality check, reminding us that even the mightiest tech giants aren't immune to market forces.
Our next guest, who is Tom Lee, says he expects stocks to draw down at some point in the first half, but hasn't seen the signs of a near-term top. Let's bring in Tom Lee, managing partner, head of research at Fundstrat Global Advisors, as well as a CNBC contributor. I referenced our conversation. We weren't in makeup per se. Sometimes we talk in makeup. This just happened to be outside of the makeup room.
Yes.
But we're still talking. I like it better when we're actually sitting down and sort of, you know, I feel like that stimulates me when we're both. Not really. You said immediately there's some dry powder left. It's not over yet, although there are some signs of fatigue.
Yes, I mean, we've rallied 16 weeks, up 23%. The last two sort of long rallies were 16 to 19 weeks and 21 to 22%. So it's mature, but we don't see the signs of the tops. Normally, like margin debt is only $700 billion. It was $900 billion in October 21, and there's still $6 trillion of cash on the sidelines. And even this week into NVIDIA earnings, I kind of see the stock kind of weak into the report, which makes me think
the stock could surprise to the upside. And I think that would sort of help us get some more juice on the upside from here.
That's interesting. The one of your calls, which and I remember at the time we just said stop doing that. It was like a weekly call for the S&P based on an inflation number, on a friendly inflation number. Last week we did not get friendly inflation numbers. But do you think that the trend is intact?
Yes, I think there are some difficult seasonals because companies raised prices in January. That made January look like a hot CPI number. And I think February CPI, which comes out next month, is going to reverse some of that, and it's going to put investors in the bond market thinking inflation is falling again. So.
Oh my God, that'd be a great time for another one of your calls. If you hadn't sworn off making a call on where the S&P will be in a week, that would be a good time to do it, but don't.
Yes, I've promised myself not to do that.
Okay.
But can I just ask one question? Given this sort of short-term bearish, would you call it short-term bearish?
Well, I think there's going to be a moment where investors have to get cautious, but it's a maturing rally, so I don't think this is.
So I guess the question is, for those folks who are sitting around with cash right now, everyone's always trying to figure out, I have a little cash. If they have cash, what am I supposed to do? Are they supposed to wait for some kind of grand moment to put it in the market? And of course, timing is always sort of a challenging thing to do. Are they supposed to put it in Bitcoin? I know we'll probably get there in about a second. What would you be doing with your money if you knew things were about to get worse and not better?
Based on this Nvidia story, there are two things that could happen for Tesla. One of them is that Tesla benefits from the potential saga of Nvidia's lower than expected earnings. And second to that, even if Nvidia does record massive numbers for its earnings, it signifies one thing, and that is the incredible potential that lies within artificial intelligence. Many may think that Tesla is just a traditional car maker, but Tesla's CEO Elon Musk wants the EV maker to be seen as much more than just an electric car company. There's no doubt then that Tesla is a leader in the EV space, but beyond just making cars, Tesla's got a stronghold on tech. The company has consistently built up artificial intelligence, and this is one major reason why it continues to win. AI is more than just a recent discovery. It's something that companies have been leveraging and investigating for years. And the current push into mainstream offers investors a slew of options across industries and an opportunity to earn massively from their investment. For instance, Microsoft made a splash with its $10 billion investment in ChatGPT founder OpenAI. And now it's got the goal of building market share for search engines with Microsoft Bing. Similarly, Alphabet's Google Search dominates the market, with a significant market share, and there's more room for growth there too. So will Tesla make it big in AI? It's very likely.
It is a big day on Wall Street for AI. There are high expectations for Nvidia reporting its fourth quarter results after the bell, and investors have been retreating from the AI juggernaut, sending shares down over 4% on Tuesday at least. Nvidia, along with another big AI play, Palo Alto Networks, pulling broader markets down with them. So what impact can we expect artificial intelligence to have from here? We've got Joanne Feeney, who is the Advisors Capital Management Partner and Portfolio Manager. Joanne, great to have you here with us this morning. Just AI as a portfolio play right now, where is the setup now coming off of Palo Alto and going into NVIDIA from your perspective?
Yeah, good morning, Brad. There's a lot of opportunities in AI. Obviously, NVIDIA is among the most attention-grabbing of them, and rightly so. It's the picks and shovels, right? It is what makes AI applications possible. And so it'll be interesting to see what they do tonight. We can talk more about that. But there are a lot of other ways to invest in AI. There are other chip companies, like you mentioned AMD, but also Broadcom. And then there are also the software companies that are developing those applications, whether it's a Snowflake or a ServiceNow. There's other hardware companies rolling out AI capabilities embedded in their products. So there are a lot of ways to capture the value that AI is likely to bring to a lot of different sectors of the economy. And we're playing various options there, not options in the financial sense, but various investments there, depending on the strategy. Because NVIDIA is not for everybody. It's a higher multiple, riskier position. It's going to be more volatile, may not be appropriate for, say, an older investor who's looking for income out of their portfolio, right? So it really depends what your strategy is, what your goals are for investing, how you want to play AI. But there is a solution, there is an opportunity for every type of investor here.
Drin, let's talk about what we heard from Palo Alto Networks after the bell yesterday. Obviously, some concern there. There has been some commentary this morning saying that maybe this signals weakness that we could see more broadly across the AI landscape. If we do see Nvidia disappoint on any metric tonight, what do you think the impact is going to be more broadly across the sector? Could we see a number of these AI names under pressure as a result?
It's entirely possible. I mean, clearly, NVIDIA's outlook is going to shape the investor view of what is possible from AI and all those related AI plays. But I think that you have to differentiate between the capacity to run AI training and inference models, which is what NVIDIA is enabling with all its super duper graphics processors. You have to separate that from how AI is being developed in applications. And, one doesn't necessarily imply, the other. So if NVIDIA, for example, has a little bit of a slowdown in the sales of its chips, which, by the way, we think is unlikely, it doesn't mean that services companies aren't picking this up and seeing lots of sales related to AI. So I think it would be a mistake for investors to read too much into NVIDIA's results, particularly on the application side.
Where did you expect some of that? And eventually there is going to be a life after NVIDIA that we have to think about too, in terms of some of the massive run-up that we've seen. There's these different pillars of generative AI where you've got the applications that sit on top of the language learning models and those models that sit on top of course, the chips powering the data centers as well. So where is that next portfolio pivot, perhaps, that's still within generative AI, but is later on towards the kind of consumer appreciation or realization of being able to have hands-on some of these solutions?
Yeah, right. So you've broken it down really nicely into you think about three buckets. First, you've got the chips that make it possible to build the servers to run the AI training and inference models. Then you've got the folks building those servers and making those services available to not just the consumer through, say, a ChatGPT, but also to other software companies that are then developing novel ways to use AI. So there are three areas. So yeah, you can say, okay, at some point, the growth in the sale of the chips may slow down, right, eventually. We're, I think, a long way from that, given how much demand is sitting out there. But then the consumer-facing opportunities we think are in companies like Amazon, Microsoft, Apple, and other potentially social media plays or retail plays.
Tesla has addressed AI more directly. For one, it develops semiconductors to power AI. Among these is its FSD chip to control autonomous driving features and its Dojo chip, Tesla's semiconductor designed for deep learning. Tesla also develops AI software to improve the driving experience, and that's why seasoned investors like Cathie Wood believe that Tesla is probably one of the biggest beneficiaries of AI. Tesla's also the only auto manufacturer to develop its own AI chip. According to Cathie Wood, the automaker is in pole position to be the leader in the autonomous taxi space. It's no secret then that Cathie Wood is a big fan of Tesla, and in her own words, the real sleepers are the companies that not only offer AI expertise, but also domain expertise and large pools of proprietary data. And she also added that the latter is going to make all the difference in the winners and losers. The point here is that a plus mark for Nvidia means the same for AI. And since Tesla is an auto and AI company, it simply means that we're yet to see the true potential of Tesla unfold. A major issue with Nvidia and similar companies has been cryptocurrency. Remember the crazy days of skyrocketing GPU prices fueled by miners? Yeah, those aren't exactly coming back anytime soon. The crypto market's been in a slump, and that means less demand for Nvidia's beefy graphics cards. And that leaves analysts worried about this crypto hangover and how it could put a dampener on sales, especially in the gaming segment. So will Tesla be one of the ones making a smooth getaway with pockets full of profits? Only the market will know for sure. However, there are strong reasons to believe that the upcoming season is going to be a wild ride, and Tesla's in the front row, seatbelt fastened tight. But what do you think? Will Nvidia announce positive earnings? And if it doesn't, how do you think this is going to affect Tesla? Let us know down below, and if you'd like to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.